What's that? What we forgot is better than whatever they remember?
Don't ask them, what do he know? What I forgot is better than whatever they remember.
Welcome back to Delta Code. I am Delta, an economist with over 20 years of investment experience, here to share my insights with you to help you become financially independent like I have. If you watched my latest video, published yesterday, I made a new portfolio for my top 10 or 11 ideas going into the end of 2024. I gave reasoning for each company and looked at their financials briefly. If you haven't seen it, check it out. This is the portfolio, and it's up 1.25% already since yesterday. Now, the big winner is Intel. Intel is up almost 10% since I published that video. My reasoning for Intel are in the video, but in short, they are one of few companies that will benefit from the AI boom. And as United States goes ahead with onshoring of chip manufacturing away from geopolitical risks in Taiwan, because right now Taiwan Semiconductor is the only company that makes these kinds of chips, and United States does not want to lose that capability should China invade. So they've spent billions and billions of dollars helping companies like Intel start manufacturing in United States. Now, Intel and Taiwan Semiconductor received billions of dollars from the US government and have either started or planning to build fabrication plants in United States in states like Arizona. Yesterday, some more positive news came from Intel, partnering with AWS to make new AI chips, as well as being eligible for more billions of dollars from the government. It was sub 20 when I recommended it. It was about 18 when I initiated my coverage. It's been on my radar since it dropped to 30, and now it's already 22. So this is a good pop-off since starting, and our options are happy. I bought some long-dated options that expire at the end of 2026 at a $30 strike. So this is so far looking great. Tomorrow, the Federal Reserve meets, and we will know their decision whether they will keep rates steady or lower interest rates. Nobody's expecting them to increase interest rates, though that is one of the possible outcomes. Not very likely. The prediction markets are pricing in either a 25% basis. TradFi are calling for a larger rate hike of half a percentage, 50 basis points. The least favored senator from Massachusetts, Elizabeth Warren, wrote a strongly worded letter to the Fed asking for 75 basis point cut. She is doing something that is very irresponsible. The Congress made Federal Reserve independent for a reason, and they have an army of economists that are more informed than a random senator from Massachusetts. Anywho, everybody's pricing in a rate cut for tomorrow, and right now it is just a matter of magnitude. The overly optimistic market sentiment at this point might be people pricing in more than 25 basis points. If that doesn't happen, even though we get a rate cut tomorrow, the market might pull back because they are pricing in a larger rate cut. So be prepared for market to pull back even if the rates are cut, because everybody already expects the rate cut, and then that is already priced in. So if the market is also pricing odds greater than zero for a 50 basis point rate hike, and that doesn't happen, well, it will be sell the news sort of event, because right now people are buying the rumor. The most obvious companies to benefit from interest rates being lowered are the tech companies and companies that deal in rates, like mortgages, real estate. That is why I have Upstart and Redfin here. They're both heavily shorted because interest rates have been high for a very long time and their businesses have suffered. Real estate has come to a bit of a crawl. People are not buying houses, they're not moving, they're waiting to upgrade or get a house that fits their growing family size because they cannot afford to purchase a home with the current rates. If they're locked in at a 3% or lower interest rate right now, it's financially irresponsible in many scenarios to get a 7% mortgage or prohibitive. So once interest rates drop down, this is going to be the first domino. We can expect companies that deal in lending money or are in industries that are heavily leveraged like real estate to do well. Tech is also an obvious beneficiary of this because tech companies often borrow a lot of money and run unprofitable businesses until they scale. Tesla is on a brink of full self-driving and releasing robotaxis, and people buy more cars when interest rates are lower as well. So it's hardly a company that doesn't do better with interest rates being lower. One interesting one is Coinbase that gets quite a bit of its revenue from USDC stablecoin, which gets 5% interest on US treasuries. So if that interest rate goes down, they may lose a bit of revenue there unless the amount of USDC in circulation goes up to make up the difference. Just yesterday, Tether, another stablecoin, minted $1 billion. So there is an inflow of capital into the stablecoin market, and we will see how that will play out for Coinbase. As you may know, Coinbase is the biggest position in my stock portfolio, and I will publish my Coinbase forecast soon. It is done. It is at the salon getting its hair done, getting its nails did, so it can make its debut in front of you for your viewing pleasure. And while we're on crypto, let's check out the crypto markets. Coinbase stock has a correlation beta almost 1-to-1 with Bitcoin price, and Bitcoin is up 7% on the week. Above 60,000, it's at 61,000 now, holding strong. While Fear and Greed Index is still in fear mode. I wonder what will happen once we get into greed. Right now, the Ethereum Bitcoin ratio is at its lowest level since 2021. It's breached the 3.5. If you do not have any Ethereum, this may be as good of a time as any to acquire some. Or even if you have Bitcoin, to trade some for Ethereum, because this is possibly a deal of a lifetime. I personally added to my Solana position at the 130 range. If you watched my price predictions and ranges to buy during a crash, I had Solana at 100 to 120 as a good range to start a position, and Ethereum between 2,000 and 2,200 if it ever dropped over under 2,000 to just back up the truck. We may never see ETH under 2,000 again. So if you are starting a position, it might not be a bad idea to start scaling in the low 2,000s. Chainlink is back to almost $11. Polkadot is $4.22, relatively cheap. Near is at $4.20, at 6% up for the week, 9% up today. Uniswap is up 10% today, back to $7. ICP is holding around $8. Sui has been on a tear this week, up almost 26% to 115. Aptos is hovering around $6. AI coins and tokens, we have Render at almost 5. Tau is up 16% for the week. Aave is doing really well and holding up, almost 150, just holding steady. Arbitrum is at about 50 cents. I also increased my position today, picked up some more ARB as the biggest layer 2 currently for Ethereum. Under $2 billion seems like a deal. Thor Rune at $4 seems very cheap. Arweave under 20 at 18 also might be a good time to start a position or add to a position. Lido at $1 is becoming a stable coin. This is the biggest liquid staking derivative on Ethereum. They have over 30% of the market share. They're pretty much printing money. This is good value. Anyways, back to the stock market. We are almost back to zero here. Little market exuberance, maybe tapering off. Pre-Fed meeting. Markets do close in 3 hours, so there's a lot more that can happen. And now I give you your moment of Zen. If you take a look at this monthly crypto gains chart by year and month, here we can see January of each year since 2013, averaged up about 3%. Mostly it's about 50-50 whether it's going to be a good month or not. Now February, only 2 years since 2013 have been down years. March looks about 50-50, and most of the months it's basically a coin toss. But September is generally a bad year. September is generally a bad month for crypto. And as we are in September, this year's shaping up not to be too different. But October in the last 11 years has only seen 2 months, has only been down for 2 years, which means October in crypto is also known as Uptober. At the end of September, the Federal Reserve is about to lower the interest rates, inject more liquidity into the market, and we are about to have an end of the year rally for most assets, including crypto. So, October away. If you have been disappointed with the crab walk in crypto, just going sideways for the last 6 months, I give you this. Don't be surprised if that happens. Well, this was a quick recap of today's market. I am Delta, economist with over 20 years of investment experience, helping you become financially independent like I have through investing. Thank you for tuning in. And as always, may the force of compound interest be with you. Peace.